Analysis target ORCL, Oracle Corporation. Welcome to Cyberstock Reports. Today, we are decoding the mystery behind Oracle. Now, just so you know, our analysis is based on data as of December 12, 2025. And of course, the quick disclaimer. What you're seeing is an AI-powered simulation, and it is not financial advice. Please invest at your own risk. Okay, let's dive right into the big question on everyone's mind. The market is just grappling with this huge contradiction in Oracle's latest report. There's this massive gap between what they're promising and what's actually happening. I mean, think about it. How on earth does a company sitting on a $500 billion backlog see its stock just crash by 14%? It doesn't add up, right? And that brings us right to our first section, the $523 billion paradox. You have to ask yourself, is Oracle basically a coiled spring just waiting to explode with all this AI-driven revenue? Or is it a debt-heavy trap just waiting to snap shut on investors? So the whole story with ORC right now is this dramatic clash between two really powerful opposing forces. You've got limitless demand on one side, and on the other, you've got this physical bottleneck that's just incinerating cash. It's a real tug of war. So let's break down this battle, and we'll start with the bull case. All right, first up, let's look at the bull case, which is all about this idea of limitless demand. And really, this entire argument is built on a foundation of seemingly endless demand for their Gen 2 cloud services. It all comes down to one absolutely staggering number. Yeah, look at that. The bulls are pointing to this one. Just mind-blowing metric, a 438% year-over-year jump in what's called remaining performance obligations, or RPO for short. Now, what is that? Well, simply put, it's the total value of all the contracts they've signed for future revenue that they just haven't billed for yet. It is a massive, massive forward-looking indicator. So what's backing up that huge number? Well, you've got this unprecedented backlog. We're talking over $500 billion. Their infrastructure as a service, or IaaS, is growing at a blistering 68%. I mean, that is outpacing the entire sector. So the narrative from the bulls is pretty straightforward. The growth engine is fully intact, it's gassed up, and they just need to turn the key. Okay, so with numbers like that, it looks like a clear buy, right? But is there a blind spot here? You bet there is. And this brings us to the bear case, which pretty much explains that violent 14% drop in the stock. It's all about the absolutely staggering cost of actually fulfilling all that demand. And this is the number the bears are zeroed in on, a negative $10 billion in free cash flow. Look, this isn't just some small dip we're talking about. This is a total collapse into negative territory. And it's all being driven by a massive, massive spending spree just to build out the infrastructure they need. So to actually fulfill all those orders, Oracle is planning this, it's a huge gamble really, a $50 billion CapEx plan. And CapEx, is capital expenditure. That's just money spent on physical stuff like data centers. This whole thing is burning through cash like crazy, and it's raising some serious red flags, like concerns that their earnings are being artificially propped up by one-time asset sales. And from a technical standpoint, the stock just broke clean below its 200-day moving average. For traders, that's a huge deal, a really important long-term trend indicator. Which brings us right to the core of this whole conflict, the bottleneck. We're talking about a physical, real-world bottleneck. It's this fundamental, structural problem caught right between that incredible, massive demand we saw and the harsh, expensive reality of actually supplying it. So here's the concept you really have to wrap your head around, the infrastructure bottleneck. I mean, you can have all the signed contracts in the world, a mountain of them, but they're basically just paper promises. They're worthless until you can actually build the data centers, flip the switch on, and start sending out bills to your clients. Until then, no cash comes in. And this really gets to the core of the problem. Just picture this for a second. You've got this massive, futuristic Oracle server tower, glowing that Gen 2 cloud blue. That tower, that's the $523 billion backlog. But then you'll look down at the foundation, and it's just total chaos. Construction cranes are buckling under the strain, and there's a furnace at the bottom, literally burning through piles of cash. That furnace is the negative $10 billion in cash burn. It's just a perfect visual for this gap between promises and reality. This whole situation creates a pretty significant risk, and it's drawing some powerful and, frankly, cautionary historical parallels. It's starting to feel a lot like the telecom collapse back in the dot-com era. You had all these companies borrowing huge amounts of money to build out infrastructure for demand that, well, it just materialized way too slowly. And that turned all that debt completely toxic. So, where does that leave us? How do we resolve this giant paradox? Well, this has officially become what Wall Street loves to call a show me story. Basically, all the fear and uncertainty, that's already priced into the stock. Now, the market is just sitting back, arms crossed, waiting for Orcl to prove they can actually execute. And this table really visualizes that huge gap we've been talking about. On one hand, you have the market's expectations, which are sky high, totally driven by that massive order book. But then you have the corporate reality, the brutal facts of the cash burn and the very real execution risk, and it's just dragging the whole narrative in the complete opposite direction. So, at the end of the day, the path forward here is pretty much binary. It's one way or the other. The key catalyst for a turnaround in the stock hinges entirely on one single thing. Can Orcl execute? Can they start turning that $523 billion backlog of paper orders into actual, tangible, positive cash flow? That's the only thing that's going to stop the bleeding. And that leaves us with the final, big, provocative question that every investor has to weigh for themselves. Is Orcl building the future here? Is this massive spending spree creating the foundational infrastructure for the next wave of AI? Or are they just repeating the past? Is this a dangerous echo of old bubbles, fueled by nothing more than debt and hype? So to wrap this all up, Orcl is a fascinating story. It's this high-stakes conflict between enormous future potential and some very significant, very real present-day risks. And finally, just one last time, please remember this is an AI simulation. The final investment decision is and always will be yours alone.